Happy anniversary, Warriors. 3-year anniversary of FACE. How's everyone doing today?
Happy anniversary.
How are you, buddy?
I'm very well. Thank you for everything you do, man. I mean, it's been 3 years. Amazing.
Thank you so much, Stel. So I hope we've served the FX trading community the first 3 years, looking for 3 threes. So this is our first 3. You guys know how I like that number, right? Anyway, we're giving away 3 free 1-month subscriptions to attendees every day this week in acknowledgement of that. So I believe you'll be picked randomly from the attendance list. I want to thank everyone out there for supporting it. Hope you've grown.
Dale,
yeah.
Good morning and happy anniversary.
Thank you, sir.
Just to give some details.
Yes.
We can export from Zoom the list of attendees,
Yeah.
but that's after the webinar has been
Right.
completed. So each day starting tomorrow,
Okay.
we're going to be randomly rolling for 3 of the people that attended the previous day, because that's the only way we can actually do it. Okay. So for today's winners, we're going to do that live tomorrow. And, you know, for tomorrow's winners, the day after tomorrow, and for Friday's winners, the upcoming Monday. So, yeah, exactly. Yeah.
All right. Beautiful. So we're giving back, and we want to offer you guys for your loyalty, and also give some people a chance that haven't tried it. You know, I think after a month, you'll be hooked. We're like the pusher man, pushing our research and you know, our hard work on you, and hope you get hooked after a month. So getting back to the markets for this week, I'm looking to fade this dollar strength. I have a small Dixie short on. I'm thinking, you know, maybe we could work up towards the 101 level. That was something Blake talked about down here, that we could squeeze up here. Euro pound's giving some back. I'm not sure if it's going to take out last week's low or not. But that was a nice scalp by the team the other day. And so I'll be looking to see where this, you know, maybe we get just a marginal new low. But I like the way this is shaping up around 61.8. And then I'll be taking a stab at the euro down around 107.50, around 78.6 back. Turnaround Tuesday comes with, gosh, you know, during our 3-year anniversary, we have a full moon, so even the heavens are celebrating FACE's 3rd anniversary week. So looking for some decent trades to set up on Turnaround Tuesday. This is something else Blake talked about. I don't know if, you know, what the good news was, but, you know, Blake was talking about people, you know, going home short every Friday, and it's been working. And just his trader intuition most likely just said, you know, we're due for Monday to be a good strong day, and I'd say 91 handles higher in the S&Ps. You're warned not to go home short, not to, you know, just be bearish all the time. And it doesn't matter what instrument you're looking at. In fact, here's my lesson. You know, I thought gold was going to fail from the 1620 level, and here we are up at 1640. So, you know, challenging this, I didn't expect this. So caught this and then started selling in here, some successful scalps. And then I actually put one on where I'm underwater pretty good yesterday. You know, a lot of people are saying this is the left shoulder and this is the head, and they carved out a right shoulder. So I guess the neckline's all the way up here at 1700. That would take you to 1950 if that turns out to be reality. Interesting action in the crude. You know, I noticed this on the weekend, that before we had this gap lower opening, we actually had a 3. And I'm not in the camp that this was, even if it was a bottom, I certainly wouldn't be reaching for crude here, maybe down here. So it's possible that this 3 drive leads to a correction in the crude you know, maybe halfway back, 61.8 back, I would take a shot. But the S&Ps, you know, potentially, we don't roll over here and we start coming through 26, the next fib level is going to be 27.85 halfway back. And then the last thing I'm looking for, and maybe I missed it today, is the yen rallied to 50% back here. So I didn't take it. 61.8 is closer to 109. Maybe we have a chance to get there. One more shot up to 109.89 actually, so another 100 pips higher. And the surprising strength, I think, well, you know, finally the commodity currencies are responding to gold. So Aussie having a good day. A lot of things I don't know what to do with coming in here on Monday, but want to see today's action and set up for fades. But I would say now, after gold did what it did, that probably the highest conviction trade for me coming into this week is to fade dollar strength and to be looking for something like this after we peak that could take it all the way back down to the base. So this is what right now is the only position I'm not really underwater and going in. Friday is Good Friday. We're open on Good Friday, aren't we? This Friday?
Yeah.
Yeah, okay. You know what? Every Friday in face is a Good Friday.
Happy anniversary, Dale, by the way. Thank you for being such a great host for the last several years. I mean, it's pretty cool, you know.
Yeah, that promo that Z put together, I didn't even realize some of the stats. So I mean, it was on our anniversary, YouTube is a is a blank screen.
Makes sense, because when I started looking into the stats, I couldn't believe them myself. Actually, I had underestimated.
Yeah. Well, thank you guys. I tell you, it's as you know, Blake, me being over 100 years old, I've had plenty of experiences in different business models across my career, and
I know.
this
You've
is
seen
the
the
best.
creation of the boob tube, and look at look at you now.
Yeah, but this is really the best team and the best people that I've ever worked with and have had the most fun with. So you know, it hasn't been work; it's been enjoyable for me. So thanks a lot, buddy.
Hey, you know, we're happy that you were, you know, part of this. It's it wouldn't be the same without you. So you are a very, very big contributor to everything that's happened here at Face. Now we'll get to the markets, so it's not a complete love fest, which you know, it could very easily turn into one, right, Dale?
Oh, with me and Stelios in here?
Yeah, you got a bunch of sappy.
I bet he's crying right now. And
he might be. So you talked about the dollar yen. I was selling up here at 109.22 this morning when I got up, because
nice.
I think I talked about the week ahead video that I was looking to be a seller up here. And when I got up this morning, we were, you know, trading at the 50% retracement, also 127% of this move. If you use ForexAnalytix, you got the analysis this morning. The dollar yen is back testing the 50% retracement, also the 127%, exactly what I just said right here. And you can see it was 109.23 when I posted that chart. And so I've been a seller of the dollar yen twice this morning. I sold it earlier, closed it at like 93, I think, and then I shorted again at 109.05, and I'm short now. And we're breaking this uptrend line, but I don't want to. We have to get back below 108.70 for me to be, you know, excited about it. At this stage in the game,
seems like you get more bang for the buck when you're trying to trade dollar direction right now, going with USD yen instead of, you know, being long euro, short euro, or any of the other dollar pairs.
The euro is a very difficult trade right now. One of the things that I've been reading on several different accounts from several different places, I should say, is that the euro dollar, there's a lot of Swiss Swiss National Bank selling right now. They're selling euros as they're buying dollar yen, dollar Swiss. They're supporting the euro Swiss as much as possible. So inadvertently they got to sell euros as a result. So that's one of the reasons that I'm reading that the euro continues to stay and is trading heavy at this point. So
good information. Didn't know that.
Yeah, I mean that's what a lot of people are attributing it to. That's the possible likely scenario with the euro. So for right now, the euro dollar, and I look at this down channel, and if you want to know when things are going to be, the euro might, some of the selling might abate. The euro would have to start making some significant reversals here, like higher highs and break through this channel. So we have a lot of work to do in the euro dollar to get it moving higher again. And so right now you just have to assume that that there's going to be some euro selling and not get too not too aggressively long the euro. As bearish as the dollar you might be, for whatever reasons that you're bearish the dollar. I mean, I think there's plenty of reasons to be bearish the dollar right now. But until we start to see the price action show differently, then you gotta, I think the better trade, as Dale said, is probably sticking with like the dollar yen at this moment. The cable, just so you guys know, the pound was under pressure over the weekend. There were some reports that Boris Johnson went in the hospital because, as most of you know, he tested positive for the coronavirus. So the market got a little freaked out at the open, but we have seen reports. The market's been, there's different, outlets that are saying that he's fine. He's just, doing some routine tests. So he seems to be okay, which the pound actually recovered after gapping a little bit lower over the weekend. Obviously that's still a risk. If you think about, one of the G7 basically leaders here is, has tested positive with coronavirus. It's not like he's a young pup either. So we're obviously going to have to keep some, keep an eye on what's happening in the UK and some of those, some of the recent news. Just keep an eye on what's happening with Boris Johnson, because obviously, if he, heaven forbid, something happens to him, the cable will probably be a lot lower. My assumption would be we would probably trade back into the teens relatively quickly before recovering. But that's one of like I said, that's one of those things that you got to just kind of keep an eye on versus trading it per se. Anticipating anything. You just kind of gotta be aware. Keep your stops close when you're trading. The cable. The Aussies had a nice recovery. But you might notice that we are nearing what I think would be resistance, because if you look at the Kiwi, all right, so the Kiwi is a little bit easier to identify here. You can see the Kiwi's running up against some resistance. This is after coming out of the wedge, right? So the Aussie is probably very similar, where we're going to be, pushing into some, in my opinion, some resistance in the Aussie as we are in the Kiwi. And since we have this this long wick here, and this was some fixing flows that we saw, so it's it's hard to get too aggressive, knowing that this was a fix and we don't know exactly where that resistance is. It could end up being more like this, but right now the Aussie dollar has been recovering most of the night, as equity market futures are recovering as well. And let's talk about the S&P, and let's talk about what we had discussed on Friday. We've been dealing with the coronavirus now for quite some time, and it's obviously one of the things that I'd mentioned last week, and Dale mentioned it that I was talking about last week, is you have to be really careful going home short risk right now, because I think we're at that point where you're going to start seeing, the news getting a little bit better from a medical standpoint. When I say medical standpoint, meaning that, we're starting to see the cases, maybe level off, hopefully start going down, and then the death rate's going to start going down. Now, you might sit here and go, well, Blake, that's not going to improve the economy being at a standstill for so long. I agree with that, but risk sentiment, could improve from here, which could lead to a recovery in the equity markets. May not be like, hey, we're going back to all-time highs, but we could also see, the equity markets recover towards, 2,900. And then, at that point in time, we'd have to say, well, let's be realistic. There's a lot of jobs that have been lost. A lot of, the consumer spending is down. We're probably in a, depressionary type of environment. So, equities will have to be sold. But, the initial move higher or a recovery can happen in equities before we, start moving lower again, in my opinion. So, the stock market has recovered a little bit. We are still below what I consider key resistance, which is this 38% retracement that comes in at 26, 50 roughly. You may think that we can't breach that, and in all actuality, we might not be able to get above that resistance, no matter how much improvement we see with the coronavirus near term. And that may very well be the case. I do, and I said this during the week ahead video, and I'll say it again here. I think above this 38% retracement, and then we got to start, thinking that, this market's going to turn higher. And we could probably see, from here, I would think, we could probably see another, I don't know, 8 to 10% recovery. But I would be selling strength. If that happened, I would be looking to sell some strength. And the reason why I say that is simply because, again, the improvement in how the virus is how the handling of the virus is going, and hopefully, whether it's therapeutics that are, mitigating some of the it's mitigating the death rate a little bit. I think that is all going to be psychologically and sentiment wise good near term, but it will not solve our longer term economic issues for the market. I think that the risks are that we are in a in a prolonged state of whether it's a recession or depression or what. I just think that we're going to be in a long state of recovery economically, not only in the U.S. but in globally. So any type of recovery in the S&P above like 2650, I think would be fairly short-lived. But we can't dismiss the fact that that can't happen, that we can't get some sort of rally, from current levels. All right. Now, obviously, we're going to be watching the numbers pretty closely, over the course of the next few days. A lot of people are looking for an improvement in the data, especially, everybody's watching New York carefully. So I think that, that data is going to be watched very carefully as far as new cases and whatnot. But, right now, we're probably in more of a range bound environment. We might have, just like last week, a couple of days, if you look at the daily chart in the S&P, we had a couple of down days, a couple of up days, up Monday, down Tuesday, Wednesday, up Thursday, down Friday. I wouldn't be surprised if this week is something very similar, up Monday, Tuesday, down Wednesday, Thursday, up Friday. I think we're just going to be, consolidating in these areas. So, try not to get too directional with the market at this stage in the game. I think it's it's probably more important to just kind of look for ranges to trade. Now, one of the I want to talk about just a couple of pairs really quick before I turn it over to Steve and Stelios. If you look at like the U.S. dollar Mexican peso, we rallied into new highs, and we rallied above this 25.50 level. We might have posted a false breakout here in the U.S. dollar Mexican peso. Now, I'm not trading it as of yet, okay? But I'm going to be watching it very carefully, because if we close below 25.50 today, I might actually take a short, and again, just keeping in line of, in the same vein that I've been talking, I'd be looking to trade a range, like being short up here, looking to cover somewhere down around 24. It's not like I'm looking for the dollar Mexican peso right now to drop back below 20. I think we're going to be in a range environment, but looking to, sell it up here and being a buyer down here, might be, my, the way I'm going to trade the U.S. dollar Mexican peso for the foreseeable future. But I like the fact that we made a false breakout, and this would go go along the same lines of, hey, stocks could recover a little bit. Dollar yen or dollar Mexican peso might, sell off a little bit, and then, rally again as people start to realize, hey, the stock market's down for a reason, and, the economy is really not that strong. And, then we'll just get, the theme bouncing back and forth. But I want to note that there is a false breakout so far setting up on the US dollar Mexican peso that I'm very trying to be very cognizant of at this point in time.
Look at that RSI divergence, huh?
Yeah, big divergence. Yeah, you can see it really on a 4-hour charts, pretty clear as well. As we hit new highs, that big divergence there. You're right, Steve. And the daily, we have to really correct some of this, very overbought. We are historically overbought RSIs that, we've never seen on the daily chart here. I mean, we were registering 90, I think 95 plus on the US dollar Mexican peso. So, I would assume that RSI has to, moderate a little bit here back towards, mid range before we can see a move higher. I remember reading Mark Chandler's analysis a couple of weeks ago, or maybe like a week or two ago, and he thinks that the dollar Mexican peso could be, depending on how long the situation plays out, we could be theoretically, trading above 30 eventually in the US dollar Mexican peso. And I don't dismiss that at all. But I think technically we would have to work off these very overbought and divergent, this RSI for a while. It's, we'll probably end up consolidating here for several weeks before making another move higher, I would think. So that's why I'm staying with the theme of, let's talk about consolidations and range environments for a little while in the markets before we start, assuming there's going to be, bigger moves developing. Because like I said, I do think we're in a recession, probably a pretty severe recession, if not depressionary type of data that we'll see over the course of the next 3 to 6 months. And that's going to have an effect on currencies. And one of the knock-on effects is going to be weaker emerging market currencies over time. Not saying that, right now is the moment, but I think that, over time, the dollar Mexican peso could probably go even higher than it is. And if you look at you look at some of these other emerging market currencies, take a look at the lira. I mean, the Turkish lira is just getting destroyed. Look at the rand. I mean, this is just a crazy move. Now, obviously we might, show a little reversal here in the US dollar or South African rand. But if you look at the rand over time, I mean, this is just absolutely getting destroyed. So, and I think that will continue. I think we're going to see something that looks more like this, over the course of the next several weeks. But I just wanted to bring your attention to the dollar Mexican peso. I think that's one that I'll be watching here over the course of the next couple of days. So Steve, Stelios, pretty big news that this is our 3rd year of FACE, and
Indeed.
we have.
It's also the birthday of my dog Mike, 3rd birthday.
And I hear it's also there's another birthday.
Yeah.
Yep, that's my son's birthday, actually.
And your son's birthday. So we got a lot of birthdays going on here. As Steve explained to you guys, we were going to be giving away this week. Every day we're going to give away a 30-day subscription to a free subscription to ForexAnalytix. So Steve operates that. We use I forget what. You don't have to be specific. We use some sort of randomizing software that automatically picks out of the list of emails.
Yes.
So you guys have to, hopefully you put in your correct email so we can get back to you.
We'll do it live tomorrow. Each day we're going to do it for the previous day live tomorrow. Of course, for privacy issues. We can just make the list like first letter of each name, and then we give it a number, and then we roll 3 numbers randomly. And these 3 people, if they put in their correct email, they'll be notified, and we're going to make ForexAnalytix account for them. If they're already ForexAnalytix members, we're going to extend their subscription by 1 month.
Germany plans a limitless credit program for small companies. That just came out via Bloomberg.
We have to look at the details, because the devil is in details in these things always. Yeah.
Usually, yes.
Let's see what the euro does here. If we have any type of response, the market is not responding to it right now. So, yeah, we'll see if there's any more information that comes out. That was just that was a brand new headline that just came out via Bloomberg. So. So anyway, we'll see if there's any movement there. But I just want to tell you guys that are listening in, we really look forward to having a few of you being able to join us in the chat rooms and being part of the ForexAnalytix family, if not hopefully longer than 30 days, but at least for 30-day, free. So. Anyway, I want to say thank you all for your continued support of ForexAnalytix. Thank you for listening in. Thank you for making this a wonderful 3 years of broadcasting with you guys. So with that being said, I'm going to turn it over to my colleagues, Dale, Steve, and Stelios.
Good hunting today, brother.
Thank you very much, Blake. And
Thanks,
I
guys.
said it, first of all, the feelings are mutual. Second of all, I said it the other day, and I want to show it again. Since Blake just read the news about Germany, keep in mind that you can't compare Germany to many other countries, for example, the US. This is Germany's debt to GDP. So Germany's debt to GDP peaked in 2009, 2010 at 82%. And since then, they took it down to less than 60%. So yes, Germany is one of the few remaining prudent Western economies that can actually afford to stimulate now, because in essence, they did what even Keynes thought is the right way to go, which is what? During good times, you run surpluses. So during bad times, you can run deficits and stimulate the economy. Now, the vast majority of the Western economies have translated that in during the good times, you run big deficits. During bad times, you run enormous deficits. And that simply doesn't work. Right, Stelio?
Yes, indeed. It does not work. But obviously, you can kick the can for years or decades. At some point, it's going to catch up with you.
Yeah, at some point, the chickens will come back home to roost.
Yeah, if you're using a single currency like the euro, countries who do that at some point can't print their own money, so they have to somehow find a way to do it. Or if you're printing your own money, if you have your own currency, you just devalue it and keep going. We've seen this happening for many years for many countries. So let me start with what's been happening. Obviously, risk on today, because numbers seem to be peaking in terms of infections and deaths in the US, in Italy, in Europe in general. That's definitely good news because we don't want people to be dying, that's for sure.
For sure.
The only question is now, how does that translate into equities? And my opinion is, I kind of agree with Blake. I think there's going to be some euphoria now. But at the end of the day, look, you're a human being, you're sitting at home, or at least I'm sitting at home. Let's say tomorrow there are 0 new cases and 0 deaths here in Greece. Am I going to go out and do the stuff I did 3 months ago? Absolutely not. I'm going to limit my interaction because obviously the people are going to be a little bit cautious. You know what they say, summertime, the more it gets warmer, the more more easily this thing is going to go away. But the experts are saying that this might come back in the winter. So I don't think we're going to be back to regular activity.
Yeah, and not to take into account that I think that the vicious circle part has already begun, meaning I think that the vast majority of people understand enough to realize that all the economies are going into a recession. So what do people, companies and everybody else that participates in the economic system do when there are bad times coming ahead? They restrict spending, right? They limit spending. So even if we assume that we are very, very lucky and before, and the phenomenon recedes now that summertime comes to the northern hemisphere, and we assume that we're lucky enough and during this virus recession, they do find hopefully some medicine that will almost eliminate the symptoms and complications that can actually make coronavirus lead to death. Still, the other problem is still going to be there. I mean, people ahead of a recession and with a lot of people losing their jobs, they won't be going out and spending as much as they did, nor having their regular activities. So the hit to the economy is going to be there, even if we assume the best case scenario for coronavirus, which, we wholeheartedly hope that we're going to get the best case scenario.
Yeah, and also, people keep talking about the V-shaped recovery. Think about it. You have a company, some kind of company that is services or whatever, and you've been hit hard, right? You have 0 customers, so you have to fire a lot of people. You have to essentially close your business for a while. When this thing looks like it's over, what are you going to do? Are you going to go back, hire the 30 people that you fired? Of course not. You're going to start slowly. It's going to be.
You're going to start slowly, and if you see demand, getting restored to previous level, which isn't going to happen overnight. So you're going to take it one step at a time.
Oh, yeah, obviously, some business sectors will go back exactly to where they were very quickly, but I think the majority will not. So that's why
that's not going to be the rule. It's going to be the exception. Yes.
Yeah. So I think we're not going to see a V-shaped recovery. I think we're going to see an L-shaped recovery, whatever it is. And unfortunately, this is going to drag on, and we're going to get, I think, a couple of years of. And
still, on the other hand, it also makes sense because we had one of the most prolonged economic expansions in history. For example, in the case of the US, it was the longest one. And, not even needing to go into analyzing that, it was artificial in a huge extent. But even if that wasn't the case, logic would indicate that especially now that you're in a recession for a damn good reason, because the economy was, stopped to a halt, going through the recession period after such a prolonged expansion cycle can't end up being like a 3, 4, 5 month thing. I mean, I think best case scenario, it's going to be close to a year. And that's best case scenario.
Yeah. And, I don't want our attendees to get confused and confuse a market recovery with an economic recovery, because
absolutely not. You're
in
right.
2008, with the low in the market in 2009, the economy did not start improving for at least another year after the low in the market.
Yeah, that's very true.
They can diverge for a while.
They can diverge. Yes.
Yeah. Okay, buddy.
They can.
That's my anniversary thought, fundamental thought.
and I think that's what I wrote in my analysis during the weekend. Actually, in my analysis, those that read, the basic technical analysis in SPX, I wrote that this looks like a pennant. We can push higher one more time towards like 2,700, 2,800 before we see a move lower again. And that would actually bode quite well with the scenario that perhaps things start looking better and more optimistic now, having to do with the virus. We still have market participants focused mostly on what is happening with the virus. And once the index keeps recovering, if that's the case, at some point they're going to realize, okay, let's say the virus is much, much less of a threat than it used to be. But what about the economy? What about price to earnings ratios? Because we've seen huge reassessment in what earnings are going to look like. Almost all companies have been, in essence, changing their estimates, for much, much worse. So it's going to be one of the worst, moves lower in estimations about earnings. So that also has to be reflected in market prices, right? So I do think that we might see this recovery going on for a little bit longer. I still have half of my long position in the SPX, so I'm not talking my book now. I have it because I thought that might be the case. But I do think that once the market moves a little bit higher, it's going to start reconsidering that, okay, regardless what happens with the virus, we're in a recession. And during a recession, things are not going to be looking good. So the market will have to move, we'll have to post another leg lower, in my opinion. So I do think that we might see an extension higher here. As I said, 2,700 to 2,800 wouldn't surprise me. Wouldn't even surprise me under some circumstances seeing an extension towards the 61.8 at like 29.30. I doubt it, but not impossible. But I would expect the market to continue lower following that. So I still view this as a bear market rally. Having said that, nobody says that it can't extend for a few days, even a few weeks longer than this. Okay, and this in essence covers my thesis about all indices. I mean, even if you look at the DAX, for example, I don't know if it's going to be like a flag or if it's going to be a pennant, but I still think that this is a corrective move higher. Upside targets are clearly the previous one we stole here, the 38.2% at 10,200. But we also can extend higher here, even towards the 11,600 area that you see there, the 61.8 previous low there as well. So, maintaining a bearish bias, I think, is the right approach. But having a bearish bias doesn't mean that you jump in the market, guns blazing, being short, because you might find yourself quite a lot out of the money before you actually can get in the money if you still have your position. So it's one thing having, a medium-term bias, because we're talking now about a medium-term bias, but that doesn't mean that it's going to play out within the next few days. Okay, that's why I'm warning you that my thesis hasn't changed, but I still don't see the signs that the market is rolling over yet. Okay, so we're going to be here, every day, so we can reassess, as it goes. Now, I tweeted out on Saturday, if I remember right, that despite the news that we had, that the OPEC meeting, and Stelio, do you have any details about that? The delaying of the OPEC meeting, any details about that? Or
I don't think anybody has any details at the moment. I mean, we talked about it on the webinar on Friday. We said we're only a headline away from oil, spiking, and this is what's happening. Over the weekend, there was one official, I think, who said, oh, this meeting might not happen on Monday. Now it seems to be back on. I mean, I don't know, but the end result for me is that, like we've said for weeks now, oil in the 20s, I think, or even in the 30s is just not sustainable.
It's a short-term thing. It can't be a long-term thing, at least not in 2020. Now, this would be a different discussion if we had it in 2050, because it's a clear slow trend that the world is going to be moving away from oil. But is this a fast process? Is this something that can happen overnight, over a year? No matter what you hear the environmentalists say, and by the way, let me not be misunderstood, I'm also pro respecting the environment, but I'm also I'm also trying to keep an objective bias. So as much as I would like for oil to, stop being used yesterday, I know that unfortunately that's not economically feasible. So, like it or not, when you assess a reality, and especially when you take, decisions based on which you're going to make or lose money, sentiment should not play any role in it. So as much as I would want the world to move away from using crude oil as the main energy resource, I know that it isn't possible. So do I think that crude can stay at 19, 20, 15, 25 for a prolonged period of time, in 2020 or in 2021 for that matter? No, the answer is absolutely not.
Steve, I had the conversation with a friend yesterday who's a trader, and he said, "What do you think about oil? Where is it going?" I said, "Look, it's going to zero, but this is going to be like after I die, because we're gonna
that's a good point.
It's not gonna be in demand, so it's gonna go close to zero or
yeah,
at
that's
zero.
a good point.
But
yeah,
first, I
but
think we're gonna see it spike a little bit more first.
Oh yeah, absolutely. I'm with you. It's going to zero, but in a time horizon that, if you bet on that to trade it, you're going to be long gone before you can make money. Yes, that is very, very true. We're far away from that. And for the time being, as far as we can tell, looking at everything in the market, prices close to 20 are unsustainable. They can stay there for a very limited amount of time, but that's it. A week, 2 weeks, a month, 2 months, worst case scenario, but there is really no way that I can think of that somebody that bought crude at 19 and could afford being out of the money for a period would end up really losing money on that trade. I would consider it a very unlikely scenario. Nothing is impossible in this world, but if we take a very high probability scenario as being certainty in trading, that's it. So I tweeted actually that the market would gap obviously lower, quite a lot lower, but I thought that this would be a buying opportunity. Actually tweeted crude will open with a big gap lower on Monday based on news, but it is likely that we're going to get more headlines to pump it up without seeing new lows first. Bottom line, buying crude this week after an initial dump lower, probably a good play. $26, $25.30 and $24.50 will be supports. Here is your $25.30. The overnight low was at $25.29.5. So what I tweeted on Saturday, that's my exact opinion. We've already pared back more than half of the losses. And I do think that as long as, they don't completely cancel, the meeting, it's not easy for crude to go back there. Unlike, impossible not, but unlikely yes. So I think that crude will probably gain more. I wouldn't find it unlikely to even touch 35. Can even do it within the week before it can pull back somewhat. So I would be very, very careful if I was you trying to short crude, because it can really go vertical in your face, and that's not something, that's not a position you want to find yourself in. Now, having to do with gold, I know it's a Monday. I know it's quite early in the day. I know that this triangle was more or less a little bit arbitrary. It passes through these weeks. But it looks like to me that, it's continuing higher. I still see RSI divergence, so I'm rather careful, but, nobody can doubt that it remains very well bid. So about gold and silver, because we every day have people asking about gold and silver, I still see gold being in a good place. I still see silver looking much weaker, although still in a recovery. I'm actually monitoring this ascending channel. I do think that silver, regardless, even if this is a corrective move and we have lower prices from there, I do think that it can first make it to 15. I wouldn't be that much surprised if even if it made it to 16, another confluence of resistances, the 61.8 and another horizontal resistance area before moving lower. So although silver isn't really convincing that it has found the low, I can tell you that, even if this is a corrective move higher, I still don't see any evidence that it's over. So, I wouldn't be jumping the gun here trying to be short silver. I wouldn't be short silver or gold anyhow, but I mean, even if your thesis is being short, I don't think that technically speaking, that's what you should be doing now, or that's the best timing for you to attempt something like that. So Stelios, when are you going to die? He needs a hedge. I can tell you, Stelios, he's not a smoker, he's not drinking much, he's working out, he's thin, so I would give him another 50 years easily. So can you please talk about the USD MXN? Actually, Blake talked about it, and I think he covered, USD MXN perfectly. USD MXN has produced here likely a false breakout. Of course, we need to get more evidence and a huge RSI divergence. So if you want my technical thesis here, I think I wouldn't be surprised. I mean, this is what I was looking for when we were back there, a pullback there and a new high. Actually, we got all that sooner than I drew it. But if you want my opinion of what can happen from there, something like this, an irregular correction or so.
Or how about a pullback and then another drive? And that would be just a shallow
That can
pullback.
happen as well. That can happen as well.
So that's only
like
the
this.
first divergence. I'd like to see one more, and then it drops.
Yeah, something like this, you mean?
Yeah.
These are likely scenarios. I don't know, from, sometimes I can envision price action following just from
having seen it so many times.
Yeah, I mean, it's not 100% conscious, you know what I mean, Coach?
Yeah.
It's
so
it's
experience.
It's experience in combination with
having seen it.
Yeah, some factors, underlying factors that are working in my head. So I don't know, for some reason in this case, my intuition tells me that this is a market that can easily, now that it took out some of the short positions here with this spike to new highs, I've seen this happen too many times, and I wouldn't be surprised if the next move to that would be taking out all the long positions with a lower low from this low before moving higher again. You know what I mean?
Oh yeah, you don't know how many times, Steve, I've waited for a 3 and all it took was a 2, only one divergence.
Yeah.
So there's no guarantee that things are always going to set up in 3s. So you know what? I tell people on this high right here, even if you don't short it, it's definitely a time to take off longs because it's
absolutely.
not confirming.
Especially after, if we close the day with a candlestick like this.
Yeah.
No, I wouldn't be holding my long position anymore, or at least I would be holding only, a little, like a third of it or whatever.
Yeah, it's your first warning sign. Price is not confirming.
And look at
momentum.
this RSI divergence. I mean, it's huge. I mean, we're talking about.
We were talking about that down there.
About a record RSI, like something like 97, something on the daily you don't really see in currencies like ever.
Yeah.
And from like 97, we're now at 71. So, we're talking about a massive, massive divergence, right? Massive. So yeah, that's what I think about it. And I think that the rest of the exotic currencies, because I see we have questions here about USD, TRY, etc. I think that the rest of the exotic currencies might produce something like that. First of all, about USD, TRY, look at where we are at the moment. Exactly on top of this channel. You look at USD ZAR, where we are attempting to get rejected from. This channel, right? So, I mean, yeah, I would be careful here. I would find it quite likely that we might see a pullback from, current levels before we can see higher prices. So, yeah, this is not the place for you to be long anymore. Now, you want to fade these moves. I think these are big moves, and these can be even if corrective, they still can be big reversals having to do with how much they move. So the safer way to go is wait for the daily close, confirm that the candlestick is a reversal candlestick, and then you can be short for a few days looking for a deeper pullback. Okay, that's what I think about it. What about the dollar? Think we'll go up or down in this euphoria? That's a good question, FX Trader, actually. If the dollar is going to be following higher while indices are recovering, or if it's going to be getting sold off. Depends on several factors. I can tell you the one thing for sure. If we go to the DXY, and here it is, undeniably, the trend here is very, very choppy. So what we know as a fact is that, despite the fact that we've been in an uptrend based on the fact that we had higher lows since like, what is it now, like 28 months ago, we had some sharp moves lower and higher, but the overall, the move higher is not impulsive. So, we can keep moving higher, but do I think that it's going to be worth being long the dollar? I mean, do I think that you can make like a lot of profits being long the dollar in a little time? No, I don't, actually. I think that whenever it comes, the next really worth trading move for the dollar is going to be lower. And it's going to be a very sharp move lower. But that can happen like in a month from now, in 2 months from now, in 3 months from now. It depends on how the whole situation unfolds. I mean, how the whole situation with how we go into a recession, what happens with emerging markets, what happens with dollar demand, what happens with monetary policy in other parts of the world outside the US, etc., etc. So I don't think it's easy trading the dollar at the moment. That's why I would take it one currency at a time, because there are currencies that look much better against the dollar and currencies that don't look that good against the dollar, as many that we have seen. So I think that trading the dollar for the foreseeable future until it's a good time to sell the dollar against almost everything, because that time is going to come, as I said, and it's not in the so distant future.
Steve, Enrico is raising something that I never thought of before, and I use a lot of RSI. He's saying problem of divergence on RSI is that RSI is capped to 100, is designed to produce divergences. I would rather look at MACD divergences, even though MACD, there is a divergence. You ever thought about that? So MACD can go above 100. They have
in the beginning of my trading career, I used a lot of those indicators, and I've talked about it in the past, that all those indicators that are made to capture momentum more or less tell us the same story. You need to learn how to read them properly and when to pay attention to divergences, because that's a good point that you're making.
Yeah, you could go broke trading divergences.
Yes, and that is why, as I've said multiple times, trading solely based on divergences is a very, very wrong thing to do. So for me, and that's why we've made that presentation several times as well, meaning trading with confluences, because that's our aim here, trading with confluences. Confluences give you higher probability to be on the right side of the market. So once you have one indication that you should be in one side of the market, that's weak. Once you have two, it's a little bit stronger. Once you have 3, 4, 5, you get what I'm getting at.
Yeah, it's like an attorney. The more evidence you have, the stronger the case.
Exactly. So, all these are tools to be used in combination. A strong candlestick reversal in combination with a technical pattern, in combination with an RSI divergence, for example, or a MACD reversal or whatever, in combination with a strong resistance area, can point to a bearish reversal, for example. And then you feel much more comfortable trading a reversal if you have, all of the aforementioned, right? Now, trading just because you see an RSI divergence, nah, or a MACD rollover, nah, I mean, I wouldn't be doing that. That's why if you paid attention, I said, wait for the day to close, and if we have a reversal candlestick, like a shooting star that we saw in USDMXN, then you have at least two pieces of evidence in combination with a fundamental one, meaning we know that USDMXN usually pushes higher as risk is in off mode. So as long as we see the S&P and the rest of the indices crawl higher, is a third indication that USDMXN is not going to have an easy time posting higher highs, right? So already, for example, for USDMXN, we already named three factors. If you see today's candlestick being a nice bearish reversal candlestick, in combination with the RSI divergence, in combination with the fact that risk assets do not confirm a higher high in USDMXN, in combination with the fourth factor, which is what? Risk management. In combination with the fact that if today's reversal doesn't take us, let's say, 5% lower, which is very unlikely for currency pair, then at the end of the day, you'll have a very rewarding, a very appealing risk-reward ratio, because you're going to still be rather close to the previous high to make an attempt in being short. Right, that's how things work. I mean, you take a combination of factors, and the last element you need, which is also absolutely necessary, is an appealing risk reward, because there are occasions that I see a pattern that is very clear in my mind and a very high probability scenario, is being bullish or bearish or whatever, and I'll still not take the trade because I don't see an appealing risk reward. Okay, so I understand stagflation is in the cards, but to what extent you think low demand will limit inflation? Thanks. Dimitri, listen, low demand will definitely limit somewhat inflation. And I remind you, and I talked about that, I think it was on Friday or on Thursday, that the healthy thing for an economy during a period of contraction, during a recession, is to go through disinflation. That is not something we should avoid. That is something we should embrace, because disinflation or deflation during a period of recession makes the hit of the recession smaller, because the vast majority of the population is actually losing income, but at least the value of their money is not taking a hit, it might be increasing. Unfortunately, central banks are trying to persuade people that the opposite is correct, that we should strive to have positive inflation. Either we have a booming economy or a huge recession, which is completely wrong. So will a recession exert disinflationary pressures? Answer, yes, absolutely. Do I think that with the stupid monetary policy that they're following now, which is at an extreme level, they will manage not only to counteract the disinflationary pressures that low demand will bring, but make up for it? Yes, I think that this time, with this overkill, they're actually going to manage to, to bring quite a lot of inflation. And I think that the problem is going to become apparent not immediately, because anyhow, inflation is not something that drips down, like a waterfall. It does it, slower. I think that the problem is actually going to begin when the economy starts healing, because when the economy starts healing and demand starts coming back in the market, that is when the extreme monetary policy conditions are going to translate to very high inflation. So I don't think we're going to see, very high inflation immediately, but, at a second phase. So not at the first phase now. So stages when okay, we read that. Can you analyze EuroCAD and USD CAD? Yes, USD CAD. Listen, I have no real way of seeing anything bearish with USD CAD here. I mean, we've broken out from a multi-month consolidation. We confirmed that that was the case because we exploded higher once we did that. And so far, this move lower has been corrective. Now, is it over? We can't declare it being over as long as we trade within this channel. So I think that we either break higher from here immediately, so we retest the highs at the very least, or we get rejected from here, we post one lower low, I would look towards 138, and we move higher from there. So, monitor this channel, and, this is going to tell us which of the two is going to be the case. As I said, if we get rejected, I think 138 is going to be pretty nice, a pretty nice level to attempt to being long again. But in any case, I would need to see very, very different things for me to stop having a bullish bias here. So for example, you remember I talked about that before. I mean, in general, I'm bearish the dollar, right? But I've said that since some months ago. One pair that I would definitely not be bearish the dollar against is this one. So USD CAD, it was, more or less clear that, it was bullish, and I think that's the case still. Coach,
Yep.
Interview time.
Yep.
Perfect. Who do we have today?
Anthony Allen, 3X
Okay.
Traders.
We have, a few more questions, USD INR, Bank Nifty, natural gas. I'm going to cover all that tomorrow. And don't forget, those of you that are here today, tomorrow we're going to have the roll for which of you will, win the 3 1-month ForexAnalytix subscriptions. So be there tomorrow for that. Okay, thank you, Coach. Enjoy the interview.
Thank you, Steve. Anthony, it's been too long. I'm getting you set up here. Not sure if you've ever used Zoom before, but we'll talk you through it. Welcome back to Face, Anthony.
Can you hear me?
Got you loud and clear.
Oh, great.
All right, so what you have to do is hover your mouse over a drop-down menu. You'll see a green box that says share.
Green box, share screen, and let's see. Must be this one, screen one. Whoops.
There you go.
Getting flicker on my video.
Coming up. All right, so
here we are.
Looking at the SPX. How long's it been, Anthony? Were you here?
It's been a long time. Well, I got kicked off Twitter for I was trolled and called somebody a politically incorrect name, and then they have no customer support over there.
Yeah.
So I ended up just blogging and doing something different for a while. It took me like 2 months to figure out how to get back on there.
Social media are nowadays filled with snowflakes.
Oh yeah.
Yeah, it's amazing. And I mean, I'm 100% with disagreeing with anybody, but the idea of banning somebody because, you don't agree with them as long as, they keep it civil, I really don't understand it.
Yeah. What is this? Stalin running Twitter or what? Anyway,
well, I spent a lot of time there supporting Trump, and that gets me, gets a lot of trolling and and a lot of political blogs, and just, I say things people don't like, and I understand that, but... Oh,
I do that. Every day I say things people don't like. It's almost like my calling. So
right.
Anyway, all right, so let's get to the S&Ps, and you're looking at technical breakout. So the question here is, and, we're getting some nice up moves here today, Anthony. You looking for a continuation of a bear market rally, or how are you looking to play this S&P?
I believe we're going to come back and backfill. This is just the beginning of a pullback. Today we see the market filling the gap, and because it's holiday trading this week, I think nobody wants to get short.
Okay.
And I think traders knew that when they drove futures up. So we're seeing some retail shorts trapped if they got short into the weekend, which usually isn't a good idea.
Yeah, and because it has been working. You know what is interesting, and I'm going to start looking at this because you're using the spot. It is a SPX daily. You're showing gaps. So if I use just a CFD or whatever, I don't see the gaps. So
that gap off the bottom was huge.
Yeah, almost like an island. So So backing and filling.
I think
new
just
lows
a pullback.
coming.
I think a pullback and then higher, possibly right after the holidays. But it's hard to see how it pulls back if no one's going to be going short into the holidays. So it could be a little while.
Yeah, so maybe
it's a huge move. What do they call it? The biggest rally since 1933.
Yeah.
So I don't see anybody in a hurry to chase this.
Okay. One thing that's bothering me is Google search. Over the last couple of weeks, one of the big searches has been how to buy stocks. That it's this is a once in a lifetime buying opportunity. So I think there's going to be a retest of the low, maybe even a marginal new low. Your work telling you anything like that?
Not really. I think that tail, the hammer coming off. Well, it wasn't a hammer. It's difficult to say, but I don't think we're going to retest the low. I think we're already off support, and
all right. The beginning of a new bull market that could propel it to new highs.
It could. With all the Fed's not going to raise rates again. They learned their lesson, I think, and I don't think it ends well because we could go into hyperinflation. But we're going to at least going to fix this market, I think. Don't fight the Fed, they say.
Okay.
But money managers haven't even gotten their land legs back yet. This rally off the bottom was just a technical rally breakout, and traders trading high volatility and just a snapback. But I think until the VIX comes down and things get back to normalcy, then you're going to start seeing money put back to work.
All right, where do you think people are going to start feeling more comfortable with vol levels? Back under 30?
Below 20.
20, okay. So
the VIX has some work.
Yeah, VIX has some work to do to get to under 20. I mean, we could be at 2,900 by the time the VIX is under 20.
Oh, yeah.
And that's when people will come in. They'll feel comfortable after a 700 handle rally. And
they'll see it as more, less volatility and a recovery from this coronavirus story.
Okay. I could tell by the way you say story that you have some ideas about it, but what else market-wise is on your radar?
This chart, I wanted to show that the market was taken down on OPEX. And I had called the top using the DAX.
So what is OPEX?
Options expiration.
Oh, okay.
And this is, I'm all about like options expiration dates when picking targets and picking tops.
You look for like high open interest contracts to give you.
No, I don't do that. I just go by dates and just like, and also holidays. So like this week, not expecting much, not expecting anybody to come in short oil or anything else. We could maybe see gold be taken down.
Why? Why?
Because it's easy, because it's low volume, and and it'd be a good opportunity
for a bear raid in gold.
Yeah.
Well, what do you make out of it? I know you follow things. The fact that people are willing to pay in the physical market $4 over silver, $4 over spot to take from a coin from a bullion dealer, and $150 or so over spot for gold. Is that bullish to you, or is that the public lining up to buy metals? What do you think?
I'm not really sure about that. It's, again, we know JP Morgan has been manipulating gold for years. The racketeers, if you Google search JP Morgan racketeers gold, you find I think that caused
market.
the short squeeze in gold that we recently saw.
Okay.
And
right.
but you know, I think J.P. Morgan, they're part of the Fed, and they know gold is the enemy of the dollar.
Okay. Do you follow commitment of traders reports for Qs
No,
at all? Me
no, I
either.
don't.
Because everyone tries to be the commercials, and the only problem with being the commercial is they're richer than me. They have, you know,
Yeah.
their pockets are so much deeper.
Oh yeah.
They could, you know, be wrong for a long time and still be okay.
Oh, this is true.
Yeah. Okay.
You know, Nigerian brothers follow like what's the smart money doing, but and they'll go buy options that way. And
yeah.
and if they see somebody buying a lot of like Boeing, for instance, they'll jump on board, which isn't a bad strategy.
Yeah, they look for size coming in.
Mm-hmm.
And I do think, though, you have to grow a ponytail to trade their methodology.
I think we won't be a problem since we can't find a place to cut our hair
a barber. Yeah, I'm
getting pretty long.
I'm working on the Nigerian tail here. So
yeah.
Anyway, okay. So I called this a megaphone. Here in this broadening top. This is DAX. Okay.
This is Germany. Yeah, and so I warned everybody Italy was going to collapse and all this for months. And well, especially, you know, Germany's on the hook for Italy, Greece, Portugal, Spain, all the pigs,
right?
Which they don't use that acronym anymore because that's also offensive. I mean, that's offensive, I guess, to some people, but
I mean, not kosher.
It's right.
But the rabbi spits on it. So anyway, all right. So,
but that's
Europe
still that's the real.
Trouble.
I believe that's the real reason the market was taken down.
Yeah.
I mean, I have conspiracy theories about this virus. Was it used? Was it planted? We got U.S. blaming China and China blaming the U.S. and Bill Gates coming out and pushing vaccines. I mean, it solves a lot of agendas, including global governance. And I mean, the rabbit hole goes deep. But if they wanted to do this in order to take the bankrupt European companies or countries down and get Germany to capitulate, which they have, they're on the hook for that Italian debt. And this I remember they talked a lot about this towards the end of the crash in 2008, and then it kind of they quit reporting it.
Okay.
But it's still a factor. All that, like all the derivatives on Deutsche Bank's balance sheet, and even J.P. Morgan. I mean, the banks are still toxic. And we saw what happened to the banking sector in this crash.
It led it. So, and part of it is yields. You have any feel? I know you follow like TLT or anything on the interest rate front that is
the TLT,
giving you any messages?
Yeah, I'm seeing a rally in the bear TLT. See, this is the public charts
TBT.
area.
TBT.
TBT now.
TBT is the bear, right?
Oh, let's see. I've got it right here.
That's all right. You just show what you brought to show.
T-bill, it's the 20-year Treasury short.
Okay.
And it's pulled back. It went a little lower even after this hammer. You see?
Yeah.
I mean, I think it's going to break out here. I think
that's the most contrarian call on the board, I think, to be looking for higher rates, because so many CNBC guys have been talking about a 0 or lower on the 10-year, and you're looking for the opposite here, like me.
The short-term bonds look terrible, and I mean, I wouldn't touch that market. But these longer-term, I think this is going to stabilize or come down. I don't know if that. I suppose that does mean higher rates, right?
Okay. Yeah.
How does this affect gold? Does gold also come down, you think?
Yeah. Well, you know, I've heard shy girls say everything's about yields. So if yields went up, it could, because that cuts into the opportunity cost. It costs you money to hold gold. I don't know if I don't know if 1% or 2%
That's Bitcoin's argument.
Yeah. Okay.
Because it doesn't cost anything to hold Bitcoin. I mean, that's the argument those guys make.
Okay, what do you think of cryptos? I haven't talked to you for a while. You know, a lot of people also thought that it would be a negative corollary, a risk-off hedge, and it certainly wasn't that. It went down with the market.
So I think that's the enemy of the Fed too. They're going to do anything to protect the dollar and the petrodollar. I mean,
okay,
we made this deal with Saudi Arabia in the 70s. Probably a lot of people don't know that when we went off the gold standard, that we would protect Saudi Arabia, buy their oil, they would buy our treasuries and our debt, and that's been going on for 50 years.
And price oil in dollars only.
Yeah, exactly.
That's really the peg, right? So I mean, that's what makes it a petrodollar. So
and like,
go ahead.
Like Gaddafi threatened to trade
he wanted euros,
oil and gold.
Yeah, that was,
and they immediately took him out.
Yeah, I think Saddam too. I mean, the hegemony.
Oh yeah, it's all right.
Yeah, hegemony has driven policy to protect the hegemony of the dollar. So, okay.
I think this all kind of leads to they're talking about the oil war with Russia. I think it leads to a real war. I mean, that would help oil. That would save the petrodollar.
Who's it? You're talking about a WW3?
Yeah, probably. I mean, this is what happened after this would kind of what caused World War I and II, hyperinflation in Germany, and the economic collapse, and then the blame game. And I mean, even World War II after the Great Depression, plus Germany was still hurting. So yeah, I kind of see that long term. Like short term, I'm bullish and think we're going to see a big rally and possibly even new highs in the market.
Okay.
With this chart, I just wanted to point out that this was taken down. It held up until OPEX. We knew about coronavirus and what was going on in China, and we did. And people were like, "Well, why is the market rallying?" Even Bloomberg was asking.
I was asking.
OPEX. We saw the VIX are sold for weeks, and it held up above the previous low, but they loaded up on puts for a long time, and then they took the market down. I get charts I can show you.
So that was Fed expiration. So what's happened to me in options is I was right about the direction, but I didn't buy enough time. So people that were in Fed puts lost money, and then the day after expiration, they would have had windfalls.
And then they collected on March OPEX is where we saw the reversal. That's no coincidence.
Okay, so a lot of inflection points.
And then, weekly OPEX, those calls were paid. See, this overshot to the downside.
Right.
And they spent time down here purchasing weekly options, and those paid. Now we're kind of in limbo, the dust has settled. I'm glad you didn't have me on sooner, or like during the crash, or even ahead of it. I thought,
the magnitude surprised
and we're still going to be waiting for the crash.
Yeah,
but
I kept looking for more of a failing rally, and never happened. So you weren't alone.
This is Australia. It's funny. I'm pointing at the screen. I'm so excited. I'm like, this. I've been watching this for a long time. You see this peak out into a broadening top.
Yeah.
In wave 5.
Yeah.
So I knew it was about to happen. Too bad I don't have any way to short Australia, I was short SOX, as you probably know, and putting out the warning on the VIX.
And that's that's interesting because that barely took out the high, A high, which was 07. Kind of like, I don't know if the Russell took out 2007-8 highs. It was another laggard, but
a lot of sectors did not make new highs. Meanwhile, there were market makes new highs was the headlines, and there was a lot of speculation seen. Where's another foreign market? I can show you that. I'll see Spain. That was set to collapse.
God, that was really weak.
It's been in a bear market for
since 08.
Since 08, yeah.
Yeah.
But you don't hear this. They don't report this. They report Trump trade fears or whatever. But meanwhile, the bond market's blowing up and the repo market's blowing up, and the IMF is warning about corporate debt and REITs. That was another sector that was hit really hard. I mean, but all these, this is all set to collapse. And here's the Eurozone. Here's a good example of where they took it down. And I mean, like the criminals who control this market, and this was support, or supposed to be. And where did they take it down overnight? They took it below support. They took out everybody's
Trap
stops.
people that were long.
You've seen that before.
Yeah.
And so I think that's about it. Italy, Brazil, Japan. This chart's interesting in that it looks like a downturned either wave 4 or wave A. I mean, it made new highs, but this could be a bearish wave A. We could see wave B, and then a much bigger collapse. So I'm going to be cautious going into the summer. I'd like to come back on in like 3 months. Maybe it'll resolve itself.
Oh, you got it.
Oh, here's the CAC. Yeah, this is the French CAC. So it made new highs. And this again looks like an extended wave 5. 1, 2, 3, 4, 5. And this is a complicated pattern. Most Elliott wavers don't really know much about it, but it looks like a zigzag.
Still showing the Nikkei.
Oh, no, this is the CAC.
Oh, okay. I show on the screen the Nikkei data.
Oh, let me see if I refresh my chart. Are you seeing the TMV now?
No, still it's stuck. So maybe
it's stuck.
You stop sharing and then reshare.
Okay.
That'll bring it up.
New share. Sure, got the right one here. Did that fix it? How's it working now? Can you hear me? Uh-oh. You can probably hear me acting like an idiot, but I can't hear you. Let's see. Chat is on. Let me try. Should I do chat?
Yeah, got you.
Oh, you got me.
Got you. Okay.
Okay, so you got that chart now?
Yep.
Okay. And we were just looking at another chart where I said, see where they took it down? Well, you see right here where they took the stop out.
Yeah.
And that's no coincidence. And
so let me ask you this. If you think we're going to see a new high in the U.S. markets, and you've shown European, will they just be failing rallies, or is there going to be any kind of move away from U.S. dollar denominated assets into maybe something in Europe or emerging?
I'm thinking maybe U.S. recovers, and we got the Fed has our back, and so money flows into U.S. markets, exits Europe. Maybe Europe collapses.
Okay.
You can see, well, I've gone to these 25, 30-year charts, and they've been so helpful because it used to be stock charts only went back 20 years. But if you set the start date and end date, you can go back 25, 30 years.
Okay.
You can see the trend. This is the Wilshire.
Okay.
And you can see it back up above support.
Yeah.
You can see where it bounced off the green line, just like it has. I mean, it's amazing, these long-term charts.
Yeah, that green line is really nice line. Yeah, and that looks like a
So,
broadening top where we can make another new high there.
A new high. If this could be, well, this just looks like a pullback, like an ABC pullback.
Mm-hmm.
It looks like a broadening top. And then I could show you the same thing on the New York Stock Exchange. It's probably even a better view.
Oh, yeah, people used to trade the knife. But yeah. Okay. Wow. Okay. So it's only a 2. Yeah.
Exactly. Well, this is a lot of Elliott wavers thought this pullback was wave 2, and we were off to the races. I don't know how they were thinking that, but now if you look at it, you can say, well, this is A, B, C, and this is 2. This was a short pullback, and I mean, you can see the monster trend on this, like a broadening top. I mean, it's possible we come all the way up here, but like I said, what is that on hyperinflation? Of course, there has to be a recovery. A lot of things have to happen, but I think this coronavirus thing blows over. We're already seeing fewer cases in New York.
Okay. All right. Well, okay, so it blows over, and
we're off to the races. Speculation comes.
Well, do you think that the markets could recover? I talk about this like in 08, 09, even though we had a low in the markets in 09, it took at least a year or two before the real economy started coming back. Markets can bottom well before economic growth begins again.
Yeah.
Right? Isn't that what happened back then?
Well, the market was rigged in 09, and I mean, they
well, hasn't it always been rigged?
Yeah, and I think it's rigged now. And so I don't really, I mean, yeah, it'll take time for the investor to get comfortable buying up here, and then they'll be chasing performance again.
Yeah.
But I mean, when I was green back in 08, I traded the 08 crash and even called the bottom there. But then I got shaken out too soon on the rally, on the snapback rally, and that mistake wouldn't happen today. Oh, and it's not going to happen today.
Yeah.
Unless we start seeing new lows, then and you can see this rally off the lows in 08 was huge.
Any view on currency at all? The dollar or euro or anything?
No, not really.
Okay, that's fine.
Probably
oil? Gold?
The best trade out of this whole volatile market was oil. Last week, I caught the bottom in oil.
Okay.
And
is it a bear market rally, or is that a low that's going to stand for quite some time?
Looks like a bear market rally. This is what it looks like on the USO.
Okay.
So I saw this as a bullish snapback rally in wave A, and then oversold into wave B.
And had an island.
Powerful wave C.
You don't see those often. Down there at the end of March, gap down, gapped up, island bottom.
That was crazy.
Yeah.
You know.
Okay.
And I was starting to get bullish energy, and then they pulled the rug out, so I got burned there. But I made up for it here because I was 2x long oil at like it was 2x long and 85% gains in 3 days.
Okay. Yeah, that was amazing.
It was amazing. I wouldn't be chasing it here.
They've raised oil margins on futures contracts to like 200%.
Well,
also S&Ps too. So you like this ETF for way to trade energy.
Well, yeah, they shut down they liquidated the 3X funds, and that probably explains why.
Okay. Yeah, they're taking away markets from us now by increasing leverage and shutting down hybrid ETFs. They're starting to give us less flexibility as traders, and they certainly want, it seems like, to eliminate leverage as much as possible right now, which isn't that good for the markets because it means less volume. So
that's the wrong chart there. Oil, let's see. Oh yeah, the other one I just wanted to show you was tech, because like I said, I was short SOX because I was expecting the big one.
Yeah.
And SOX S just didn't perform that well. I got out of that probably with a 30% gain or something. I stayed short into that OPEX, and then we saw the market gap down the next week. I thought, well, I got out too early because the market's crashing, but SOX and tech didn't really get hurt.
Yeah, look at that.
This is the NASDAQ 100.
Yeah,
and
because Microsoft, you could say, just had a normal pullback in this crash.
Yeah.
Okay.
It's all about FANGs, and I believe that was the plan. Is
okay.
It's the only real market they've got.
Those are the ones that are going to lead the way. Don't try and buy value in this environment. Buy what has cash flow.
Yeah. It's so hard for me to chase what's been working. And when you look at a chart like this, and but you know, as long as I mean, the trend is your friend, and you know, I don't know how
Mr.
you
Mark,
stick with a trade.
There's nothing about the market that's your friend. All right. Anyway,
that's about right.
It was great. You know, the markets. This is what I say: the markets are unforgiving, but we have to be to ourselves because we're all going to make mistakes. So, you want to wrap it with one more look here, and then tell people how they could follow you and what you're doing. If you have a business
I'm on
model.
Twitter, but well,
you looking for followers or
not really?
Okay.
I've kind of given up on it. I'm like more into like warning investors, and that'd be a good chart. The Grizz chart. Well, here it is. So back around the time I started to see the bottom come in, I told investors get into this Grizzly fund, which is just you can probably buy this with your 401k. And then when we hit this top of this channel, I was like, okay, well, you can take off your hedge. And this was up, what, 25%?
Mm-hmm.
I mean, simple. I mean, I just find that like most traders, I get irritated. I block them. They're bullish when I'm bearish, and they're pestering me about oil for months. And then, I mean, just wait for me to pick the bottom. But it's too much distraction from what I'm doing to try to teach a bunch of new people. I mean, it reminds me of 08. Everybody was on the wrong side of the trade.
Yeah, you can't be a genius just owning the SPY and thinking that you really know the markets
exactly
anymore.
Yeah,
unless what you say happens. But I'm sure there's going to be a lot of jiggles on the way to new highs. It's not going to be an easy ride.
Definitely.
So Anthony, a pleasure having you. Good to talk to you again.
Thanks.
I think you were probably with us the first year. You know, this is our 3rd year anniversary of
Oh yeah, happy anniversary.
Thanks, man. Hold on. There's the champagne bottle. All right.
Nice.
Anyway,
here's the last chart. Oil.
Right.
So what is that? $35 on Brent crude.
Yeah.
I mean, it's possible it gets up above there and holds up until contract expiration, but I wouldn't be chasing it here.
You think 15 maybe? Under that line, possibly?
Oh, it could go well below that line. Yeah, we could see $10 oil.
All right.
So
okay,
it was a great run, but
for oil. Okay. Well, Anthony, I hope that you and your loved ones remain untouched. And it was great to have your looks here. Thanks for coming back out of the closet to share your work with us.
It was a pleasure.
Yeah, really. Good hunting, my trading warrior brother.
Okay,
so
talk to you.
Everyone, you could follow Anthony at 3X Traders on Twitter, even though he doesn't want you to.
You can follow my blog too. There's a lot of great information on the blog.
Oh, you have a blog?
Oh yeah.
All right. Well, why don't you show that?
3xtraders.com. Show it.
Okay. Yeah.
You know, it's easy to find.
Okay. 3xtraders.com for Anthony's thoughts and charts outside of Twitter. And that's a wrap, everyone. And see everyone for Turnaround Tuesday. Good hunting the rest of the day. Be careful. It's a full moon and tomorrow. And I'll see everyone for Turnaround Tuesday.
See you later. Thanks.
All right. Thanks again, Anthony. I'll see you a little later. All right, everyone. Don't just count your pips, count your blessings. We'll see everyone tomorrow. Don't forget to drop in for your shot to win a 1-month free subscription. We'll be giving them out every day this week. You're very welcome, Monica. Thank you. Thank you, Barry. Tio, adios.